Hello and welcome to Red Cup Real Estate, where Mitchell Stelling and I will be discussing today for you 2-1 buydowns, because if you haven't noticed, interest rates are higher than they have been in the last 23 years, which is, in my opinion, a bit atrocious. So we're going to give you a tool that you can use so that you can combat the high interest rates and succeed in today's market, because what you don't want to do is wait for interest rates to decrease, and then everybody plus their mother will be back in the market and you will be competing at a much hotter and higher level. Mitch,
man, that was
take it
well
away.
said. Our famous cheers.
I have to drink.
You have to drink a little bit. All right, I'm gonna put my cup down for a moment. So everything you said is right on.
Thank you.
What
Thank you.
I really want to go into is just how 2-1 buydowns work. Because a
Please.
lot of people
Please.
don't understand them.
I would love to understand.
Even some real estate agents I talk to, believe it or not.
I believe
This one does.
I believe it, but please
Yeah.
tell us what a 2-1 buy down is and how it can benefit our clients.
100%. So a 2-1 buydown essentially is where you have a seller of a home buy down your interest rate temporarily for 2 years. So how that works is,
Pause for just 1
Yes.
second. Does the seller of the home have to buy it down, or might maybe also the person who is obtaining the mortgage buy down their own interest rate?
fantastic question. I was going to get to that.
Okay, go ahead.
No, it's actually interesting. The seller for a 2-1 buydown specifically has to finance it.
Thank you.
You cannot pay for it yourself. You
Thank
could
you.
do something called a permanent buydown, but that's for another video.
It is,
but-
not today.
Not today, maybe next week. We'll see. So how a 2-1 buydown works is I pretty much wrote up just a brief analysis of a run through for it. So let's say we are, this is my fancy whiteboard today, everyone.
I love it.
Let's say our interest rate, I mean, we'd be lucky, sadly, as of today, I don't want to say sadly, but to get 7%. We're a little bit over that, believe it or not, today.
23-year
high. It's
ouch.
a wild time, but we have solutions to get through it.
We do.
So let's say your interest rate is 7%. That's without any kind of buy down. That's what the bank offers you. If the seller of the home that you're going to be putting an offer into is willing to offer what we call a seller concession, it's pretty much a credit. They're putting their money towards your buy down. We can buy it down by 2 points. And what a point is a percent. So if you are at 7%, year 1 on your mortgage is 5%. And as it follows, year 2 is 6%. And then year 3 is going to be back to that 7% for the remaining term of the mortgage.
So it cannot go higher than the 7%.
And it cannot go higher. So this is not
That's
an
super
adjustable,
important to
exactly,
know.
rate mortgage. This is a fixed rate, but it does obviously after year 1 climb back up to that 7%. The nice part about these, and when I'm working with my clients with these, I'm not planning for them to keep this for the full 25 years. This is something that we are temporarily going to be doing. So right now, as Shamika said very well, we're in a high interest rate market, but in the next couple years, following some very credible sources, we should be seeing some improvement, hopefully sooner than that.
Hopefully.
Hopefully, exactly. We don't have a crystal ball, which
Right.
I did, maybe, better spot.
So the hope is really that you're gonna capitalize on year 1 and year 2, and then you'll refinance before you get into year 3, so that hopefully you can land on a 30-year fixed at that 5 or 5% range, give or take a little.
Exactly. And that's really, if the seller is motivated, a wonderful way to leverage a lower payment of, what we were kind of closer to used to. That made sense. That was a good line.
Closer to used to.
Closer
We're
to
gonna
used
get
to. That was a
literally
fancy
doing
line. I like
speech
that.
therapy,
Yeah, we might be back.
which
We'll
Mitch
see.
is gonna talk about.
Exactly. Coming up next. But if
Which Mitch?
which Mitch?
Oh, which Mitch?
Yeah, which Mitch? That was hard. We're gonna go to speech therapy after this.
Which Mitch?
This is definitely a blooper time right now.
Keep going.
All
keep
right,
going.
so back to 2-1 buy down.
Yeah.
So that's a quick analysis of just the basics of it to give you guys a better idea of kind of how that correlates to what your payment would change wise. Let's go to my fun example of $1 million home.
Yeah.
So at the top, $1 million home. 7%, so that's, let's just say no 2-1 buy down, that's what the bank offers you. Your payment is going to be roughly, and this is P&I, so principal and interest. This doesn't include taxes and insurance on this example. So that's gonna be $53.22 at the 7%. Now, it's a little confusing how I wrote this up for you all, but we would be actually popping down year one to 5%, because that's 2% less than the base rate.
Hence 2-1 buy down the name.
We're so clever.
I'm just gonna
Sip on that. We are looking at a payment of $4,294, so that would be on year one. That is $1,038 less than what your base would be. Then on
That's
year
a significant savings. In fact,
that's huge.
You could lease a
BMW M3. Darn, missed that one.
Only if you want that.
Exactly. There's some other good ones like a Tesla. Then going to year two, we're looking at $47.96. I may have already just gone over that, but I really wanted to make sure that was drilled in. And then year three, guys, like we talked about, it goes back to that standard rate, or the one that you set in the beginning. That made no sense.
That's perfect. So let's talk about how we can apply this in today's real estate market. So let's say that a house has been sitting on the market for longer than 30 days. Now, if a property is selling in shorter than 30 days, that means that it's priced appropriately, that the terms are appropriate, and that the seller is ready to make a deal. But if a property is sitting on the market for longer than 30 days, there may be some negotiation strategy that you can implement, such as a 2-1 buy down, in order to get your monthly payments into a position where you feel very comfortable, yet still giving the seller what they're looking for as far as the purchase price. So the seller would give you a concession, and we would write that into your initial offer. The seller would give you a concession so that you could get that 2-1 buy down, and your first monthly payment would be 2% less than what our current market rate is trading at. So these are just like a couple little strategies to think about. Actually, it's just one strategy to think about when you're writing offers, and a way that you can potentially capitalize on today's market when there's not necessarily multiple offers on every property that you look at, and potentially a property's been sitting for longer than 30 days.
Totally. I want to add a little to that.
Please
I love
do.
that. So, like Shamika said, generally 2-1 buy downs are better if a home has been sitting on 30 days plus. The seller is usually more motivated. They want to move it. Do you know the average days on market right now?
It's about, no, I think it's like 32.
38 went up.
Yeah.
Okay, last time I saw it.
Countywide,
So, okay.
for single family.
Got it. So it went up a little bit, but you can actually, you have to be careful with this, but finance your own 2-1 buy down. And how you would do this is by offering an over ask offer, or pretty much, let's say your 2-1 buy down costs $20,000 and you're going to put an offer for $1 million home. You would put an offer in at $1,020,000, and you could ask for that concession back. So essentially, the seller is paying for it. However, you are paying for it up front, and they are reimbursing it back, where the lender will allow that. So that's another avenue that you could use if it's a little bit more competitive. Again, depends on the property, but I wanted to add that on there.
I think that's good to add.
Right? Pretty clever.
If you have any questions on how a 2-1 buy down could potentially help you take advantage of this current real estate market and help you attain your real estate goals, please feel free to reach out to me or Mitch at your convenience.
Got it. Oh, I don't even have my cup.
Where's your cup?
It's
Get your
down on
cup.
the floor. I must do the pow instead.
Not even.
Sorry, guys.
This is Red Cup Real Estate, and
We'll see us
once
soon.
again, we're here to help.
We are.